Negative yields, what it means for you. David Jaffe with beststockstrategy.com, and in this video we are going to discuss the financial implications of negative yields. There is a very bad situation going on right now in Europe where their economy is struggling. The governments of the European Union are doing everything possible to stimulate the economy. Negative yields, which means that when you put money in the bank account, usually that bank will pay you interest. Instead, the bank is actually taking money from you. That means that instead of depositing money into the bank and receiving a little bit of interest, instead, when you put money into the bank and you leave it there, it's actually losing money. What is going to happen in this situation is that there is going to be a flight towards yield, which means that there's actually two competing factors. The first is that that the yields in the United States are going to continue to contract. So right now, I think the 10-year yield is around 1.8%, but there's going to be a flight towards yield and a flight towards quality assets. That means that risky assets like real estate, the stock market, gold, silver, cryptocurrencies are going to have a large influx of money being poured into it because people are going to chase returns. On the negative side, negative yields means that the inflation rate is going to decrease. So in a way, this is going to be negative for real estate, because real estate is oftentimes, I would say that a significant part of the gains associated with real estate are due to inflation. So when you have negative yields, it is going to decrease the inflation rate and oftentimes lead to deflation. And as a result, the gains in real estate and other assets of that nature are going to be more or less offset. So I believe that when you have an economy where there are negative yields, and it's extremely rare. I can't remember another situation where there were ever even close to negative yields. But the governments in the European Union are doing everything possible because the economy over there is extremely bad. You have countries like Portugal, Ireland, Greece, and Spain, which are very close to going bankrupt. I think there's another one that starts with an I. So Portugal, Ireland, there's one more, Greece, Spain, etc. But with negative yields, essentially very risky assets like stocks, cryptocurrencies, gold, silver, and on the lesser extent, real estate are going to do exceptionally well. There's also going to be deflation, and that is going to hurt real estate. So the gains from the negative yields and from the and from money chasing yield is going to be offset in the real estate market by the deflationary aspect of having in the United States, having very low yields and having negative yields in the European Union. This is oftentimes going to lead to a bubble, and I would expect that probably in I would say probably around mid-2021, because generally speaking, during the elections, they're not going to have recessions because the incumbent president wants to make sure that he is reelected. So he's going to do everything possible to make sure that the economy is extremely strong. That way, when he's running, in order to make sure that he maximizes the amount of votes that he receives, he is going to do everything possible to pluck up the economy. And we saw this past week, where he lobbied the Fed for a 50 basis point reduction. The Fed then told him that they would give him 25 basis points, and they told the market 25 basis points. And then the following day, Trump tweeted out something about Chinese tariffs in order to give himself more ammunition. Now, this is not a political discussion. I don't know anything about politics. If you guys knew the amount of media that I consume, you would be incredibly shocked. I don't read any articles. I have never voted in my life, and I will never vote because I just don't. So if you want to criticize me, no problem. But I do not know anything about politics. This is not political. All I care about is educating you about what the best decision is for you in order to maximize the amount of money that you have. So my goal is to teach you skills and knowledge that you can actually learn to make money. So I'm just telling you that in my opinion, I believe that there will be a large recession in 2021. I do not believe that it's going to happen next year because of the election, but I do believe that there's going to be a massive recession in 2021, and that a bubble is going to ensue, and the stock market is going to do extremely well in this negative yield environment because there's going to be a lot of money chasing returns, and you're going to have things such as gold, silver, the stock market, cryptocurrencies, and to a much lesser extent, real estate outperform. Real estate would outperform, except for the fact that real estate is going to be held back by the deflationary environment, which are going to offset a lot of the returns from the yield chasing, from those who are chasing riskier assets with the negative yields, that you're essentially going to be penalized for putting your money in the bank account. Let me make sure that I got everything. Negative yields, your bank account is going to lose you money. The European economy sucks. They're trying to stimulate. This is going to lead to massive bubbles and an inflationary economy, and an inflationary event in risky assets. But overall, it's going to be deflationary for things like food and groceries, and even things like real estate. Things that are going to do extremely well are going to be stocks, gold, silver, cryptocurrencies, even though I'm definitely not a fan of cryptocurrencies. I think that it's a scam. On a lesser extent, real estate's going to do well. I think that there's going to be a massive pop of the bubble, and there's going to be a recession in 2021. And that's about it. I'm not necessarily a bond guy. I mean, I worked as an investment banker, and we almost always focused on equities. We did M&A transactions, equity capital markets with follow-on equity offerings and IPOs. We did do a few debt deals, but in that respect, we then we then brought in the debt capital markets for the banks that I worked at. I worked at Morgan Stanley. I also worked at CIBC World Markets, and then I worked at Tatsuki Brunei, which is a much smaller boutique firm. And when I worked with them, they were located at 40 Wall Street. So I'm not as comfortable discussing the debt side of the market as I am the equity side. But at the same time, I mean, it's pretty obvious when you put money in your bank account and they take money from you, you are going to be much more hesitant to invest your money in the bank account, because for every dollar that you put in, when you then go to take it out, you are going to be taking out less money. As a result, because people tend to invest money in assets that treat them well, you are going to invest more of your money, and you're going to chase returns in higher risk returning assets like stocks and gold and silver and cryptocurrency and potentially real estate. And that's about it. You can go to beststockstrategy.com and enter in your email address to receive over $400 worth of free training. Please let me know your thoughts about this negative yield economy that we are in, and this negative yield environment that we're in. Let me know if you plan on investing more money into the stock market. Let me know whether you believe that we are going to head into a recession in 2021, and I appreciate your attention.